The fallout ripples across the global EV landscape. China's EV slowdown isn't merely a domestic concern. It sends shockwaves across the global market, impacting investors, manufacturers, and consumer confidence. Here's how. Investor jitters and eroded confidence. The Chinese EV market's woes have sparked investor jitters. Companies heavily invested in Chinese EV startups are witnessing a decline in stock prices. This could lead to a more cautious investment environment for global EV ventures, making it harder for new companies to secure funding. Supply chain disruptions. China is a crucial player in the global EV supply chain, producing a significant portion of EV batteries and key components. The slowdown could lead to supply chain disruptions, impacting EV production timelines for manufacturers worldwide. This, in turn, could lead to price hikes for consumers as automakers grapple with component shortages. Shifting focus and innovation. The Chinese slowdown might force a global reevaluation of EV production strategies. Manufacturers might prioritize established markets with proven demand and robust infrastructure. This could lead to a shift in focus away from aggressive production targets and towards a more sustainable, demand-driven approach to EV manufacturing. A catalyst for stronger regulations. The struggles of Chinese EV startups highlight the need for stricter regulations in the industry. Governments worldwide might implement stricter quality control measures and financial viability assessments to prevent a similar bubble from forming in their own markets. This could lead to a more stable and secure long-term future for the global EV industry. China's EV boom stalls. A cautionary tale for global markets. By expert automotive journalist. China's once-roaring electric vehicle, EV, market has screeched to a halt, with leading companies like BYD experiencing plummeting sales and a wave of bankruptcies threatening to drown the industry. This article dives deep into the reasons behind the slowdown and what it means for the future of Chinese EVs, with insights relevant to the global landscape. A market oversaturated by ambition. China's EV market experienced explosive growth for several years, fueled by generous government subsidies and ambitious production targets. New manufacturers sprouted like weeds, leading to a production capacity that far outpaced actual demand. This oversupply glutted dealer lots, sparking fierce competition and brutal price wars that eroded profit margins for established automakers. BYD's struggles. A canary in the coal mine. BYD, a world leader in EV and battery technology, serves as a stark reminder of the industry's woes. Their February sales figures were a dismal 40% lower than January, and a staggering 37% decrease year-over-year. This slump highlights a crucial misstep: over-reliance on the domestic market. Unlike established players like Tesla with a strong global presence, BYD failed to diversify its customer base effectively. Beyond BYD, a sea of red ink and broken dreams. The pain isn't limited to BYD. Startups like Evergrande New Energy Auto, brimming with initial investment, failed to gain traction and are now bankrupt. Established names like Luico and WM Motors, despite initial successes, haven't fared much better, drowning in a sea of red ink. External factors adding fuel to the fire. The EV slowdown in China can't be viewed in isolation. Here's a glimpse into some external factors that contributed to the market struggles. Global chip shortage. The ongoing global chip shortage hampered production lines across the automotive industry, impacting EV production and delivery schedules. Rising raw material costs. The price of critical battery materials like lithium and cobalt surged in recent years, further squeezing profit margins for automakers. Shifting consumer preferences. While initial enthusiasm for EVs was high, some Chinese consumers are expressing concerns about range limitations and charging infrastructure, leading to a wait-and-see approach. Consolidation looms, mergers and acquisitions on the horizon. With the market saturated and bankruptcies mounting, consolidation is inevitable. Experts predict a wave of mergers and acquisitions as smaller players scramble to survive. BYD, along with a handful of other established companies with strong financials and diverse product portfolios, are likely to emerge stronger, while the rest face an uncertain future. Legacy automakers. A glimmer of hope, but challenges remain. Traditional Chinese automakers like SAIC and Geely may find solace in their established global presence, unlike BYD's heavy reliance on China. However, even these players face challenges. Adapting to evolving technologies. Legacy automakers need to invest heavily in R&D to keep pace with rapidly evolving EV technology, particularly in areas like battery efficiency and autonomous driving. Competition from established EV players. Tesla and other established EV players already have a strong foothold in global markets, posing a significant competitive threat. The road ahead, a bumpy ride with global implications. The Chinese EV industry faces a period of turbulence. The government is under pressure to act and prevent a complete meltdown. The future will likely see a more streamlined market dominated by a few key players. Whether the industry can recapture its past momentum remains to be seen. This slowdown serves as a cautionary tale for other burgeoning EV markets worldwide, highlighting the need for a balanced approach that considers production capacity, market demand, and external factors. It underscores the importance of balanced growth, prioritizing technological innovation, infrastructure development, and fostering healthy competition over unbridled production targets. Learning from China's mistakes can pave the way for a more sustainable and successful global EV future.